Hi, this is Randy Finney with the Right Side of the Chart, and this is a late session update for Monday, August 31st, 2020. We'll even call it a end-of-day market wrap. There is still about another 18 minutes to go before the markets close, but we're not going to see anything major happen that I can foresee, based on the technical levels. But I did figure it was worth an update, and I'll probably get some of these charts out. I was planning to give you some static charts, meaning chart images, but there's just a lot I want to cover in here. I'll be very brief. I'm going to just touch on everything, but again, it's the things I'm watching, things I've highlighted lately. We'll focus on that. Start out with the broad markets. Look at Apple, Tesla. Probably should talk about those stock splits today and what they mean. Look at the VIX and a couple trade ideas that I've mentioned recently, like coal stocks. Overstock.com hit our first price target today. Already up, gain about 24-25% on that one since the sell signal last week. So I'll hit on those and we'll wrap it up. Starting out with the NASDAQ 100, probably the single most important chart, at least obviously for the broad markets. And we've had zero sell signals yet on that 60-minute chart. When I started out today, we were testing that downtrend line. This is the one, this orange trend line. So far, just a successful defense of that trend line as the divergences continue to build. So this still remains the next sell signal. The more reactions you have on the trend line, like the one this morning, the more valid it becomes. Multiple reactions there. Therefore, if it breaks, you have a higher chance that more traders are going to see it, and more likely stop losses will be hit just below it. Short sellers may pile in if there's any left in this market, and that'll take us down here. Should be a nice move. Let's talk about that a little bit. So again, make it clear, zero sell signals there. Ditto for QQQ on the 60-minute chart. Covered that this morning. Let's just update it there. There's your trend line right there in orange, and we remain above that as well. Again, that's the minor trend line. Break of that brings us to that larger, more significant trend line down below. SPY, we did get we're cracking below there, but I talk about this often, and it's the reason I cover various indexes, mainly SPY and QQQ. You want to see both of them break down. If you get a sell signal in one, like we technically had today in SPY, it wasn't very convincing, but we're below the trend line, and the other doesn't break down, well, guess what? And it's what happened today. The buyers step in at trend line support on QQQ, thereby foiling any breakdown, or at least maybe delaying, if you will, the drop on SPY and the ES, the S&P 500 E-mini futures, which we'll look at right here. And that's it. So there's the trend line right there. Orange trend line, 60-minute chart, broke down, and so with the QQQ at the same time holding support and bouncing, what that's done is caused a back test. So it's technically, at least not at this point, it is not a failed breakdown in ES or SPY. It's just a breakdown that hasn't gone anywhere. And again, you really want to see impulsive selling, and most importantly, you want to see both QQQ and SPY or the S&P 500, NQ, ES, all of those breakdowns. So that's that. While we're on the broad markets, let's just look at what stands out to me. Among other things, it's just the persistent and clear deterioration in market breadth. I won't say I've never seen anything like this in my life, because I've seen all type of market conditions, but it is very clear to me fewer and fewer stocks, namely the big FANG stocks, continue to do all the heavy lifting. Here's the S&P 500. I've got a lot of lines on this chart. We're up right now. As I do this, you can see 0.14%, and then you look at the equal weighted S&P 500. You can look at the ETF. It's RSP, and you can see that that is down 0.5%. Why is that? Well, because right now in the S&P 500, I'm going to measure this out for you. I'm going to another screen here, doing my real-time breadth indicator, and I can tell you at this exact moment there are only 168 out of the 500, out of the roughly 500 stocks in the S&P 500 that are trading positive. Another way to say that is at this moment, again, I have to flip the numbers around here. We have 328 stocks in the S&P 500 down. Okay, so, and why is that? Again, it's everybody's buying Apple today for the split. I'm going to talk on that in a second. On QQQ, we have at this point in time half of the stocks in the Qs are down, exactly 50. Well, there's 102 total if you count the different share classes. So there it is. 50 stocks. I'm clicking on Costco because what I'm doing is sorting the watch list, all the holdings, and then clicking on the last of the red items when I sort them by market percent gainers or losers. All right, so that's it. Poor market breadth, and you can also see in QQQE only up 0.3%, yet QQQ is up 1.43. Now, why is that? Well, it's in large part due to two stocks today: Apple, AAPL, if I can type, and Tesla having their splits today. So I want to talk about that a little bit. So big 4.34% gain. Now, I'm going to admit I haven't read any of the headlines today or scanned them, and I'm going to assume this is due to the split in Apple. It's been very well announced. Everybody and their brother knows Apple and Tesla had splits coming up and split today. A lot of retail folks were waiting to buy it. So what does this mean? Just to recap, if you're not familiar when a stock splits, this is a 4-to-1 split. Usually you have a 2-to-1 split, but it all depends. So in this case, you have a 4-to-1 split. So they split the shares 4-to-1. You have 4 times as many shares, but the price will go down by a fourth, and so it's a net wash. Anybody that is just into the stock market, if you're experienced, or most people know, it is absolutely a zero impact. There's no benefit fundamentally to the company. It's just it's an accounting entry, if you will. You have more shares, 4 times as many shares if you held in coming into today at 1/4 the price, same value, all other things being equal. But yet you're going to say, wow, it's up 4.18%. Well, that is because the retail crowd is buying today. Why am I making that assumption? Again, backing out any headlines that might have caused any other move in Apple. The retail public tends to think a stock split is bullish for a stock, that they're getting a better value. They're buying Apple on sale, cheaper, whatever. And think of it this way too: institutional traders, they're not jumping in today. I'm generally speaking, they buy in blocks, large blocks. Typically, institutional traders, hedge funds, mutual funds, pension plans, they buy in block trades. Block trades are 10,000 shares. A block is 10,000 shares. So they're buying in much larger quantity. They can afford it. It doesn't matter to them if Apple's selling right now at $130 or if it's selling at 4 times that. It's probably actually more efficient for them to buy it at a higher price because they're buying fewer shares. So I just want to say it's pretty apparent to me, and I think that most will agree that this is retail buying. And hey, is that a bad thing? No, any buying is good. However, after an extended run, it is just, it's a known fact that usually at the end of the run, the retail crowd, they call that the dumb money. They call the institutional investors the smart money. That's not here to offend anybody. I'm not an institutional investor, so put me in the dumb money crowd if you want. But they tend to buy high, and they're the bag holders usually at the end. So again, it's one day. One day doesn't make a trend, but I do want to say that is what's causing the indexes going up, as evidenced by the breadth in the market and everything else. Fewer and fewer stocks going up today. More losers in the S&P 500, yet it's up, and same thing about roughly 50-50 in the Nasdaq 100 there. So that's Apple, and I want to talk on the history of these stock splits real quick. This is a weekly chart. I was on a daily. I just toggled over to a weekly chart. And these lines, let me turn off the other annotation. Let me turn off all these annotations for a second. And what I'm going to show you here are the history of stock splits. We're going back into the early 90s here, and you can see we had one there. There's a 2-for-1. There's a 2-for-1 here. If I hover, you can see the dates actually. 2-for-1 split back in February 28th of 05. 2-for-1 split back in June 21st of 2000. We had a 7-for-1 split there in June 9th of 2014, and now this 4-for-1. Okay, so let's talk about what happened afterwards. Now, we can sit here, do a very simplistic thing. We could just take the returns after each split, measure it out. And I'll do that here. I'm going to grab, these are rough measurements. If you see my pop-up box on the left, I snapped to roughly where it split then, pulled down. It dropped about 72%. There was a little bit of a lift after that. The stock had already peaked, was going down, and there it was. Before all said and done, they had a pretty bad, nasty bear market, took the stock down about 73%. So you would have lost, the bulk of your money, 2/3 of your money if you bought in, around that top. Now here's a 2-for-1 split. Now if you zoom in, and which we'll need to do really a little bit tighter to see the results, what happened there. Bear with me here. I need to find the zoom function. Okay, I took it in a little bit tighter back then. This one back in 2005, you can see the split there. And so from there, now I'm not going to, I can't get exactly on that date. We're on a weekly chart. These are weekly candles. From high to low, around the time of that split, it dropped about 26%. Now, a couple things noting on those two. Number one, and I'm going to add some additional layers here on this chart, is they came on the heels of an extended uptrend when sentiment was really high. We already had the first drop down there. I don't know where that split was announced, and there was this was just a bear market rally back in the beginning of that 2000 to 2002 or 3 bear market right there in Apple. And they split right in there. Either way, a lot of downside left after that. Even that one was roughly, it was well into the double digits, 25 or something percent. And now let's jump forward. The only other ones we've had since then, so there's not a lot of history here on these splits. I'm going to say that now, so we really can't extrapolate too much. But here's a 7-for-1 split, and from there everything was going up, or the stock continued up. Now, what is different about this one to me is it occurred shortly after a pretty nice bear market in Apple. That doesn't look like a lot here. I'm using log scaling. I'm going back for many years. That was a 42% bear market that it came on the heels of. So sentiment was cleared out. Bullish sentiment was washed out. Usually you have a lot of bearish sentiment after a 40-something percent, year-long plus bear market in the stock. And ultimately or additionally I should say, the technicals were strong. I'm going to put my lines back on. Now each these vertical lines show you where those splits occurred. So from a technical perspective, again, these two came after extended run-ups, well into the end of or early stage of a bull market. And if you bought after the split, and I'm talking kind of longer term, not days here, but I'm talking weeks to months, you would have paid for it. You shouldn't have chased that split. It was not beneficial for the stock. This one, yeah, if you wrote out the 20-something% drop and didn't get stopped out, yes, I will give you that. However, again, right after the split, there was that double-digit drop right there. And what you get, part of it is, it's a buy the rumor, sell the news kind of thing. Going into it, those that can afford Apple when it's over 1,000 a share, whatever it was before the split today, almost 1,000, they'll go ahead and buy it, knowing the retail crowd's going to buy into it after. And it's shortly after the split that the profit taking usually kicks in, both institutionals and even more savvy retail investors that realize, hey, the stock split, all it really does is get people into the stock. A lot of people that, to be honest, not to sound crude, they couldn't afford it before. If you couldn't afford to buy Apple when it was 800 something a share, you're buying now. Those are typically the kind of people that are not the strong hands in the market. They call that weak hands. They get shaken out, and they also tend to buy in at the wrong time. So again, I'm giving you my analysis, how stock splits work, and I look at where they come in at. So here was that 7-to-1. So the other thing on that, just to loop back, is this one came right there, and we had this clean up trend line. Shortly after that, we broke trend, and it was also following this divergent high. The divergent high marked the top, marked the end of that bull market. This was the end of a bear market rally. Then the next drop came in the final wave there. Go back to this 2-for-1 here, and look, we were above trend. There wasn't any divergence, so it was a drop, like I said. But the stock continued up from there because the chart was strong. We had just come off one of the worst, the worst bear market in Apple, maybe ever right there, I believe it was. And fundamentals were strong. The economy was recovering. The recession had just ended. We were in the very early stages of a new bull market, and so there was more upside to go. That 71% or 7-to-1 split right here. Very strong technicals. We had just come off. We had a series of divergent highs followed by a 26, 15, 16, and then 45% drop, as I said. No divergences, absolutely no sell signals on the stock. And so there's a 7-to-1 split that worked out. You could have bought it and it went well. Now this is different. Now we have a 4-to-1 split. We have a near parabolic run in Apple. We have negative divergence, clear divergence here on the RSI. We're about equal there on the PPO line, the white line, the signal line. But clear RSI divergence, overbought conditions, and we're sitting just above a trend line. So there are no sell signals yet. I'm going to be crystal clear on that on Apple. But yet the technical posture at this point in time is bearish. The stock is certainly extended, and we're not coming after any type of bear market or anything like that. This stock is in a clear uptrend and has been. So there it is. I just wanted to kind of give you my thoughts on Apple and why I don't think this is a split to buy. Some might be. This one will probably mark or close to mark a at least a tradable top in the stock in the coming days to week. And then bottom line, we watch for sell signals on both Apple and the NASDAQ 100, which we don't have yet. And here's Tesla. I would give you my trend lines, but they're all mucked up because of the split. Everything TC2000 hasn't adjusted the trend lines for the price, so I have to turn them off. All I can tell you right now, and I'll add one here, it's going to turn back the other annotations. There is, this one continues to diverge. Certainly one on my radar. From a fundamental perspective, the stock is insane right now, insanely overvalued. But it's not going down right now because it's a momentum trade. It's going up, and you can see this is pushing the index, the NASDAQ 100 up. It's up 12.6% today on nothing more than the fact it's doing a 5-to-1 reverse, not reverse, 5-to-1 forward split. And you can see, it's been lifting. Markets anticipated this. How much of that buying right there were people anticipating the 5-to-1 split? Now these are the retail crowd coming in today thinking the stock is somehow more of a bargain at $498, than it was at 25, whatever, 2,000, 2,500 bucks or whatever it would have been yesterday. So that's how the charts look. And again, the point I'm doing, what I'm trying to drive home here is these big large cap stocks, especially Apple and a lot of those big fangs, are driving this market. FANU, I think it is FNGU, the 3-time leverage FANG ETF. This one has gone parabolic. Before, you had an uptrend here, you had a near parabolic run there, and that's what you have here. I can't draw a clean trend line anymore on FANG-U. Again, it has leverage. It tracks a basket of the FANG stocks and some others in there. I can tell you. Let's see. Well, I don't have a list of all the holdings right now, but I can tell you this is a parabolic run. You get the divergences here. You're extremely overbought. Nosebleed levels on the RSI. It's right down here. You can see we're overbought there. Overbought isn't a sell signal. Sometimes you stay overbought for a while, and then ultimately one of those overbought readings will usually do the trick and take it down, like it did here, like it did here. That was your trend line, and like it will soon here. FNGD is the inverse of that, but again, all I can do on this one, I don't have parabolic line tool right now on me, but that's what we're doing there. And again, this is what's driving the market more and more as time goes on. You're seeing fewer and fewer stocks moving up, moving higher, but you don't need them all moving up when Apple and Microsoft and Facebook have such a large weighting in the index. So when this trade goes the other way, when we get those sell signals on the NDX, it'll most likely be a rush for the exits, and FANGD will probably, I think, outperform. It's comparable. What would be the SQQQ is the 3-time leverage short on the Qs. I think there'll be just money flows going in reverse, and the same thing that drives those stocks up and drives the market up, everybody buying the FANGs, when they start selling the FANGs, it's going to lead to broad-based selling in the other components as well. So either one. Again, let's move on. We don't have the sell signals yet, but something to watch. What we do have sell signals on, or did last week, as mentioned, Overstock. Overstock broke down here. It was covered in the video back then. Followed through the next day with another red candle, started moving lower, and from the breakdown point we've now hit that first target of 84.96-ish. I called it 85. The low today was 85 exactly, and it was want to cover a little bit above support, and so that's good for about a 25% drop so far. So we're at support. Reaction's likely. If the market, if and when we get the sell signal in the NQs, that will greatly increase the odds that we'll move down to the next target here. Next target's about 63 and then 42.50 in that uptrend line right there. And this one can do its own thing. It's already dropped, not 25% off the highs just since the breakdown in a few sessions. So if we can take out 85 with conviction, even with the market going up, we can easily get down to that $63 target. Maybe the next one's there. The other ones I like, right now are the VIX. This is the actual VIX here, up 12% today, and just a strong looking chart. And what this is telling me is that it's kind of giving a heads up. Remember, the S&P 500 is weaker. There is a VIX for the NASDAQ 100, that's VXN, but this is the CBOE volatility index, and this is going to play out more for the S&P 500, NYSE, those type of more broad-based indexes, and it's already triggered a buy signal right there on that green candle. Back test, it's moving up, and now it's starting to clear this 25.58 level. We're using VXX right now. There's other ones out there. This is the short-term VIX. This is not up as much today. Why is that? Well, because the markets are up today. If you see the markets drop tomorrow significantly, or in the next few days, you could see VXX up more because it's tracking short-term futures on the VIX volatility index. So either way, still looks good for now. Still an active trade. And one thing I wanted to show you, speaking of volatility indexes, here's the VXN. That tracks the NASDAQ volatility index, and that's been walking its way up too. So you have the NASDAQ going up, but the one that concerns me or stands out to me is Apple. And if you go put a chart on Apple, which we'll do here, this is a daily chart, and now I'm going to overlay the Apple volatility index. Yes, Apple is so big, it has its own zip code, and it has its own, metaphorically speaking, in the stock market, but it has its own volatility index. Let me find that for you here. Hold on one second. That would be AAPL VIX, something like that. Always forget the term. Apple, will do it this way. Type in Apple VIX, there it is, VXAPL. All right, VIX Apple. So what stands out here is, let me turn off all the lines real quick, and let's even turn that one off and go back. This is the way I see this. Okay, going back for a few years here. Move this off to the side for now. On this chart, going back several years, there's two big corrections. We can see two clear corrections in Apple right there in late 2018 and then early 2020, right? This was COVID. That was a big Q4 2018 drop, and both of those foreshadowed and forecasted and predicted the bearish technicals on Apple. It wasn't just random drops. I know the press couldn't figure out the cause of the 2018 drop, but it was well priced into the charts. And now what I want to show you, what stands out is both times what you see is, having a tough time with this today, guys. Let's try that again. I don't know where everything just went. We did Apple VIX was right here, VX Apple, of course. I don't know why everything's changing on me here. Oh, that's what it was. We jumped to a different time frame. Okay, my apologies here. All right, so you had the two big drops. And then what I'm doing is, and that's what I meant to do, is turn this back on, and you can see leading up to those drops. Yeah, I'm going to do one more thing here. I'm going to make that color a little less bright so we can see the candles here. Let's go with this right there. There we go. Now you can see the price action in the background. So remember, these were the two big drops. What did the VIX do before then? The Apple VIX. Again, this is just the volatility index on Apple. It started moving up well in advance of the drop. So this is, whether it's the smart money, typically they say the smart money buys options, or I'm sorry, sells options. They sell options, but they also use options. I'll buy options to hedge up institutional investors, mutual funds, pension plans, and the likes. And so what I see is a clear pattern of the Apple VIX moving up right before. This is the drop right here. I don't have different color arrows. It would take me too long to toggle. And you can see the Apple VIX moving up in advance. Same thing happened before this big drop back there into the March lows. The Apple VIX bottom, as it should have been. When Apple's going up, everything's hunky-dory. Outlook looks good. The volatility index for it is dropping. But all of a sudden, you start seeing this pretty noticeable spike. And for whatever reason, whatever the market forces are, those spikes have preceded those big drops. What I notice here, well, once Apple bottomed, everything was good. The Apple VIX, the white line, was falling as it should, as the stock was rallying. But as of late, we're seeing a noticeable spike in the Apple VIX, the Apple Volatility Index. So take it for what it's worth. We don't have a lot of price history. I can't go back that long because the Apple VIX doesn't go back for 20 years. So I can't look at it going back that long. I just wanted to point out in recent years, we've seen that trend where it tends to spike up before the big drops. And so then where does Apple stop? Where does it reverse? Again, you can see my trend lines are all way up here, not reflective of the split yet, but I can show. I'll just draw one up here. We have a trend line that looks something like this. I'm going to zoom in. We had this one little funky false breakdown there, a little whipsaw, but that's the closest thing to a trend line that I have there. I can see a divergence line. You can see down here the RSI making these roughly equal highs and prices going higher. There's your negative divergence. You have the PPO crossing over at very high levels. That's what I call high level bearish PPO crossover. We've never even seen, for years, we haven't seen the PPO this high. It's where my crosshairs are down here. And you can see that it's poised to make a bearish crossover. Those in themselves, or that in itself, a bearish PPO crossover, is also often a time to get out. And what I look for on that, I just threw up the PPO histogram. That's down below. The histogram is a visual representation of the distance between the two lines on the PPO. And if you don't have a PPO, a MACD will be very similar, and you could put up a MACD histogram. You have your signal line, which is a 9 EMA of the PPO line. And it looks so flat and condensed here. As I do this, you can see there is separation. And the wider the separation is, the farther the lines are apart, the bigger the histogram will be. That's what that's showing you. And then when it goes from green to red, that's where you make a bullish or bearish crossover. So when it goes from red to green, there's a bullish crossover. And when it goes from green to red, bearish crossover. And so what I like to look for is, first of all, you want to find use this only when the stock is trending, not when it's in a choppy sideways market like this, kind of grinding up. Because what happens, you tend to get a lot of whipsaws like you do down here. I like to find these clean, what I call hills. Here's a green hill, clean separation there. Even, you had one there after that choppy period. And then you get the signal right there. You had a bearish PPO crossover, boom, this came. And it told you the trend was bearish until this point. Boom, bullish crossover, you want to get long. And that worked all the way up to there. Now, given these were whipsaws, this is the Fed flooding the system with liquidity, foiling a lot of technical analysis and completely destroying the mechanism of price discovery, which is a natural interaction of buyers and sellers that determines, what a security is worth. They 100% eliminated price discovery in the bond markets, and for the most part, they've greatly distorted it in the stock market as well. And however, at some point, the technicals are going to play out. Excesses and imbalances will be corrected. And you can see here we have a nice green hill. In fact, here was the last crossover here that we had a decent signal right there. It was a decent pullback. You might say, that was so little, it's not worth it. From the time of the signal right about here, there was still, there was about 8% more downside. So it caught that, and then it told you get out here, get long again, stay long, and it's telling you right now the trend is bullish. So that's what we're looking for. And now the thing is, again, when that happens to cross over, let's turn this PPO histogram off. What it's going to do is give you a very high level bearish PPO crossover. That means the PPO way up here in nosebleed territory. It looked like it was going to cross there, but the lines didn't. They bounced. So these are the things I'm looking for. So a bearish PPO crossover in conjunction with or shortly after or before a trend line break, things like that. And again, Apple's just one stock. You need the whole lot to go down with it, and that is, Facebook, Amazon. And when that happens, you'll see hot money come out of this market, and the hot money is going to be Tesla. If Apple, let's just say, hypothetically, Apple drops 10% on the next correction, Tesla's probably going to drop 30 or somewhere along those lines. So you'll get more bang for your buck. And so the way to trade that, you can get run over by a freight train right now trying to step in front of Tesla. Anybody that has for the last few weeks, there haven't been any sell signals and pure momentum, but the divergences are building. So when you get the sell signals, and I think just a solid sell signal on the NQ or QQQ alone should do the trick. It is very unlikely Tesla will continue to climb if and when we have some decent solid sell signals on the NASDAQ 100. So that would be one out there. One potential trading up. I'm sorry my lines are all messed up. After this split, I'll redo these lines tomorrow and have a clean chart, and I'll keep an eye on Tesla for you. And that's it. Long video. I don't want to go over too much. I already covered the commodities earlier today. Update on those. Those still look good. And then these coal stocks, some of them are starting to perk up. I pointed SXC. I had a buy signal, an alert trigger this morning on the breakout. Nice day on that one, up about 7%. Some others that stand out too are NRP, poised for a breakout, getting very close. METC already broke out of this inverse head and shoulders pattern, coming up on resistance, or another potential neckline poised to break out or at least trigger the next buy signal. And this one's bouncing off support. BTU looks really nice. I think that's one of my favorites right here, right now, because it's popped the trend line today, closed down. When you zoom in, you can see it couldn't hold above it. So not a breakout, at least not confirmed with a daily close yet. But if we get that, this one should run plenty of upside potential. All right, I'm going to wrap it up here. Get the video out to you guys. This has been Randy Finney with the right side of the chart. Hope you enjoyed it.